Good afternoon, everybody. Good afternoon. Good to see so many people in as the early birds. Fantastic. I'm just going to quickly just stream onto a different platform as well, just so that there's recordings available, and then recording will be sent out later today, and then we're all good to go. How is everyone doing? Everybody excited for today? I am. Loads of people in the chat already. Hi, everybody. Hi, Linda, Jay, Sol, Thor, Artwell, Salmon, Matt, Stephen, Renee, Lisa, Natalia, Harold. Good to have you all here. Thank you so much for joining. Shows how serious you guys are as well. And for anybody else that hasn't commented, hey, John. So before we get started on today's session, let me know how long, if you're quite new to the community, there's quite a lot of our one-to-one students or current students kind of in here as well, which is great. But if you're quite new or haven't been in contact with us before, let us know kind of how long you've been trading for in the chat, what sort of experience you have. Put like 1 year, 1 month, and gives me a good idea as to, or even just kind of put what level you're at: beginner, intermediate, advanced. Amazing. So quite a few newbies. A couple of people that have been in it for nearly a decade. Fantastic. Jason, awesome, man. Yeah, I'm excited for you to join onto the one-to-one. You'll get loads and loads of good value from it. Amazing, guys. Right, I've got a good idea as to where you guys are at, and this session, it's going to be pretty down to earth. It's going to be pretty honest and pretty organic. I'm going to take you through the top 3 indicators that I'm using across multiple prop firm accounts that have helped me be consistent for the last, well, some of the software is quite new, but I've been consistent for the last 5 years. So I think we had a question around prop firms. If you guys aren't familiar with prop firms and what we mean by it, or what firms to actually go with, what a prop firm does is it allows you to essentially trade with somebody else's capital rather than your own. So if you don't have a lot of startup capital, in order to make good money from trading, you need good money, right? And especially in this day and age, in this economy, people are a little bit strapped for cash. And rather than you having to put 10 grand in an account or a grand in an account and having to grow that into a full-time income, which it's nearly impossible. Like I've seen very little people do it because it requires a large amount of risk in order to grow that money, right? But rather than you having to put your own money in an account and trade with that, you can pass an assessment and trade with a prop firm. The most reliable prop firms, they can provide funding anywhere up to about $400,000 for each prop firm these days. But my top 2 will be FTMO and Fivers. They're the 2 best in my opinion. Very reliable, and they're very good firms. Reliable payouts. A lot of people kind of get burnt by the new prop firms that are always popping up. Some of them can be good, but the majority of them not so much. Hey, Sanjay. Fivers, you can Google them. Fivers, also known as 5%ers, they're another prop firm. I believe they're US based, but they're very good. Little bit more, what's the word? They're a little bit more tight on their risk. They don't allow as much drawdown, so you have to trade lower risk with them. But they're still a very good firm. Okay, guys. So today, what we'll be covering. So I'm going to take you through my top 3 indicators that I'm using every single day not just only find the opportunities, but also to analyze and execute them. I'm using these consistently with my one-to-one students basically every single day now. It's proven to have absolutely fantastic results. This isn't a session for you guys just to sit down and copy. You know, trading is a lot more than copying. It's a session to provide you guys value and to show you kind of the standard of setups and trades that I look for. Really, really good time to jump on today as well. Close to the New York Open, so it allows for a little bit of prep work, and I'll take you through some live analysis as well. Loads of people are interested in gold. I will take you through a setup on gold that I'm currently looking at. All right, so let me present my screen. Make sure that it's all good for everybody to see, and we'll do some prep work for the New York Open. Right, here we go. Technophobe Dan is coming out now. Can you guys see that? Yeah, this is MT4. A lot of the tools that I use are based in MT4, and a lot of prop firms will require you to use MT4 and MT5 as a software as well. All right. So for those that are new, I've actually done a couple of webinars already on how to build a trade plan, some of the tools that I use already, right? On this session, I wanted to take you through all of that, basically through a live setup, and show you how I use it on a day-to-day basis, all right? All of this is a set out plan with rules that I consistently implement every single day. So kind of the philosophy I use, let me just put a blank screen up here. The philosophy I use is the majority of people who start out in trading are inconsistent, right? They're inconsistent. Sometimes they make money, sometimes they lose money, they hover around break even, or they end up just losing their capital. Why is that? Usually it's because they don't have a consistent approach in their trading. All right. So what I say, and I say it near enough every single day now, an inconsistent approach equals inconsistent results. Okay. And we'll put that in huge letters. Okay. Right. Inconsistent approach equals inconsistent results. If I can actually spell right, yeah. If you're strategy hopping, or if you're not implementing the same tools every single day, you're not journaling your trades, you're not optimizing what you're doing, you're going to be inconsistent. So what a lot of people do is they implement a strategy for a couple of days, they win some, they lose some. As soon as they start losing, they think it's the strategy. I need to move on. How many of people in this chat have done that? They've been on a bit of a losing streak, and then they've kind of blamed it on the strategy and moved on. Just put a yes or a no in the chat. How many people realistically have done that? There's no such thing, like, I'm not going to embarrass you guys. Like, honesty is always the best policy. I know loads of our one-to-one students, when they first started out, they did exactly that. Already loads of yeses, right? And it's normal. For us as people, we always look to shift the blame or shift accountability, or we always try and find that next best shiny thing. We always look to learn something new, sometimes even to fix something that isn't broken, right? And especially in trading, that can be to our own detriment. Just because you've lost a couple of trades doesn't mean the strategy is broken, right? It means that maybe, if you've got a consistent approach, maybe it's just part of the plan. You have to treat trading as if it is a business. If you don't treat trading as if it's a business and you don't account for the business costs, i.e. the losses, you're not going to get very far. You're going to continue kind of hovering around that break-even mark or slowly and consistently losing your money. And you're never going to find that really nice balance of getting that aha moment, where everything finally clicks and you continue to use it. And I can honestly say, like, when you're very, very deep into a trading career and you're making very good money and you're using the same tools every single day, it can become boring, really boring, right? Because you're using something that works for you, that's tailored around your lifestyle. And at the end of the day, you're just doing your analysis, clicking the button, following the process. Sometimes you win, sometimes you lose. You have to take it on board. But the whole point is that if you have a consistent approach, it will equal consistent results, because you can figure out where you're going right. You can figure out where you're going wrong. You can figure out how you can optimize. Okay. So now going into the tools that I use, we'll go straight down into business. All right. Tools that I use. The very, very first thing, which I've covered before, is currency strength. Okay. Currency strength is hands down the best tool I use to identify the opportunity. All right. I don't want to be sitting in front of my screens for hours and hours and hours and hours every single day, analyzing loads of different pairs that are not going to give me opportunities. I remember when I was in full-time work, and I remember trolling through like 28 different currency pairs every single day, analyzing all of them on every single time frame to figure out where the best opportunity was, and not being able to execute anything. It's what we call analysis paralysis, right? Just not being able to execute it. What this does is it says, hey, look, you don't need to analyze 28 different currencies a day. Instead, you only need to analyze maybe 3 or 4 by just identifying what markets are likely to give you a good move, a good return on your investment. So I like to use both the 4-hour and also the 15-minute time frame. 4-hour time frame is more for your longer term trades, and the 15-minute time frame is more for your shorter term trades. Okay. So based off of currency strength strategy at the minute, we can pick out a few different examples. So I've covered over the last few days with some of our one-to-one students, Euro Aussie. Euro was in a buy position here. So what does CSI do? Basically, it picks out overbought and oversold areas in the market, i.e. if you're in the green zone, you're looking to buy that currency. If you're in the red zone, like we saw on Aussie, we're looking to sell that currency. Okay. When you match these currencies up, i.e. Euro, we're expecting people to start buying it, and Aussie, we're expecting people to start selling it. When you match those two together, you can usually get quite a big move in the market. Okay. So let's actually take a quick look at what happened on Euro Oz based on that. So we got that signal on, when did we get that? So Aussie was right up here at 2 o'clock on Tuesday, and Euro started to turn at the same time, 2 o'clock on Tuesday. So 2 o'clock on Tuesday, let's just mark that out with a thing here. Two o'clock on Tuesday, that's where we were. The market went down a little bit further, and then we ended up getting actually a really quite significant move on Euro Oz. Very significant move. Okay. And I'm going to teach you today the tools that I use to consistently catch moves like this. And a lot of the time, these trades are against the trend. Who in the chat here has been taught to always trade with the trend? Who's heard of the saying, the trend is your friend? Yeah, probably from all of those things that you've seen on YouTube or baby pips, or all the different educators, right? This is TradingView, so I'm using TradingView just for simplicity here. When I do my analysis, I'll do all of it in MT4. So this is TradingView, and we'll dip into MT4, right? But anyway, loads of people are taught to trade with the trend. Retail traders are taught trade with the trend. There's a saying that goes in the markets: the trend is your friend until the end, right? When something is trending, people don't usually spot it, or beginners don't usually spot it until it's the end. So like, look, we had quite a significant downtrend in Euro Aussie, right? Significant downtrend. Well, here, if the market was here, it doesn't look like it was really in a downtrend at all. Here, it starts to look like it's trending down. It's not really until this area where people start, or beginner traders start to think, this is trending now. I'm only now going to start trending and start trading short in this area. A lot of the time, that's too late. You've gotten in too late in the trend, meaning that it's high risk. And a lot of the time, you'll get stopped out and then it will go your way, or it'll go the opposite direction. Okay. And I know for a fact, near enough every single person in this webinar today has taken a trade, it stopped them out, and then reversed completely. Okay. Or they've placed a trade, they've got the direction right, it stopped them out, and then gone in the right direction, which is even worse. They've timed it completely wrong. Okay. What my objective and how I like to trade, I use tools that help me identify when a trend is likely to reverse and when a new trend is likely to start. What it allows me as a trader to do is get in right at the start of a trend. If you're getting in right at the start of a trend, it can provide you with so much more reward to risk. And they're actually higher probability trades. And we look for specific signs in order to do that. Step number one is, in TradingView, I use something called currency strength. So very similar to the example that I've shown, I look at euro, or I look at an overbought and an oversold currency. So oversold here, overbought here. I match those two currencies together. And I look to do the analysis in that currency pair. Okay. Any questions, guys? If we've got time, I'll answer them afterwards. Okay. There's quite a lot to get through. All right. So I identify the opportunity. Once I identify the opportunity, let's take Euro Aussie as an example. Okay. Now, hindsight is a beautiful thing. I took this trade. Okay. And I'll also show you, actually, you know what? I promised I'll show you guys a live breakdown of my trade on Euro CAD. Yeah, I ended up posting something in one of our WhatsApp groups that I took a trade on Euro CAD, and it went absolutely ballistic, which was awesome, right? So Euro CAD is a prime example. This is an exact trade that I took this week, and I've gotten some serious returns on Euro CAD this week trading this way. Okay, so Canadian dollar overbought. We're expecting Canadian dollar to sell off. Okay. Euro oversold. We're expecting euros to be bought up. Let's take a look at Euro CAD. So I'm going to open up my MT4. I'm going to take all of this off and I'll show you. Okay. All right. Euro CAD. Okay. And we're going to go down into our weekly time frame. All right. So we've identified the opportunity. We said, like, look, Euro CAD is what we want to take a look at. Step number 2 is we want to go into the currency pair, and you always look at higher timeframes. The higher timeframes give you a sense of narrative, a sense of direction. Okay. What that means is, okay, in the long run, what direction are we likely going to be going in on EuroCAD? Are we going to be going up? Are we going to be going down? Right? So we're getting an opportunity, or we've had the opportunity to buy EuroCAD. Yeah, it's a trade that I took this week. We've had that opportunity. Do the higher timeframes align with that? Does it make sense to buy EuroCAD in the long run, or is it only a short-term buy that I'm going to be interested in? So I go onto my higher timeframes and I use a tool called Trade Detector. So this is kind of a preset template that I have, and funnily enough, it's decided to not work, which is lovely. Just bear with me 2 seconds, guys, and then I can get it just quickly up and running, which is classic, isn't it? Right. Here we go. I can get this quickly up and running again. And the objective of the higher timeframes, guys, is to always trade and always use kind of price action to understand what sort of direction the market is likely to be going in. Okay. Right, here we go. So this will now start to work, hopefully. There we go. Right. Okay. And then we should be ready. Here we are. Now it's working. Here we go. Fantastic. So in terms of the higher timeframes, I always look at the weekly, the daily, and the 4-hour in that order. So you're looking at EuroCAD. We're going to be looking at the weekly time frame first, and we're going to be using a little bit of price action. So we actually have some tools for automatic support and resistance, automatic trend lines, all that stuff. They're massive time saver. So I use all of these tools as well, right? So I use Trade Detector on all of the time frames to help me identify where my support, where my diagonal support, where my diagonal resistance is. So everything that you see on this chart at the minute is 100% automated. It's all part of Trade Detector. Basically, it identifies dynamic and diagonal support and resistance. And you can actually see here on EuroCAD that this week we bounced off of the middle of this channel right here. That is an indication on a higher time frame based on price action that we're going to see some sort of bounce. Okay. We can also put in some additional support and resistance. We can see that over recent weeks, we've kind of been trapped trading between 1.5776 up here down to 1.5577. So we've kind of been moving sideways, right, for the last few weeks. When we go down into our daily time frame, we can then do a little bit more investigative work on, okay, where is this pair actually moving to? So we can use, again, more daily support and resistance. You can edit these, so you can change the pip value to, let's say, 2000 pips. So there's less, or we'll do 5,500. Right, and then it picks out all of our necessary support and resistance levels for both the weekly and the daily. Okay, So on the weekly, we knew that we were going to be hitting some sort of support in that area. What interests me is if we look to the left, we ended up getting a really, really big buying candle. This is usually a sign that there's institutions coming into play in the market. So they bought up around here. If the market comes down and hits this area, the likelihood is that there will be buying power that will step in again, which is exactly what happened, right? What we also like to use, which is tool number 3, is Fibonacci, which I'll take you through in detail in a moment. But this is I'm just showing you the live example first, and then I'll tell you exactly what Fibonacci does. So Fibonacci helps us identify the waves, and you can see that we actually got a signal bang on 1.5485 to buy EuroCAD, okay? Right on that level, okay? When we go down into our 4-hour, we can then see trade detector, or our fibs again gave us a buy signal. Trade detector fired off a medium buy with this medium green square. We ended up getting a big blue arrow and buy signal on trade detector 3, and trade detector 5 entered into our oversold area as well. So we usually look for the rule of 3 on trade detector, right? We look for 3 signals to fire off a buy or a sell. And as soon as that happens, it gives us a really, really good indication that this market is likely to turn, okay? Then when we go down into the 1 hour, which is my preferred time frame to use this, you can see that we got all of the signals, all aligned, all in one area. You have to understand what we've done is we've used CSI, or currency strength, to identify EuroCAD is likely to start a new trend up, okay? We want to get in early on that trend. Number 2, we're going to identify direction on the higher time frame. Use trade detector, use price action, understand where price is likely to bounce. On the weekly, we saw some trade detector support. On the daily, we saw a Fibonacci support come in, all right? On the 4-hour, we see more trade detector support via this line here. On the 1 hour, we see even more trade detector support, and we get our signal of the holy grail, the rule of 3, trade detector firing off everything that we want to go and enter the market, and then the market fires up and it goes crazy, okay? Now, I'm going to be honest with you. I did not catch the trade right there. That's an amazing trade, but difficult to catch consistently every single time. There's no such thing as a perfect entry and a perfect exit when it comes to trading, all right? What matters is that you're consistent and that you're entering on high probability setups that you know are around a fair and a good price, okay? I don't enter trades right at the bottom. I want to see some confirmation. I want to see the market move. Now, what do I mean by that? I want this signal to fire off, and I want to see this market move up a bit, you know? I want to see it go up. And this is where I look for my entry, when I look for my entry criteria. So I use our London Trading Institute automatic trend lines in this scenario. And you can actually see this is exactly where I caught the trade. Look at this. We have these inner trend lines here. I can make them a little bit more visual for you guys by making them a bit thicker. Okay, this is the way that we draw trend lines in at London Trading Institute. Right. Oh. But look at this. Not only did we get a really, really big buy signal on EuroCAD, but we got additional confirmation when we see a trend line break of structure. I want to see this market move up and break a trend line, come back and retest it. And I literally got in here. Oh, actually, no, looking at my report, it was here, sorry. This was my entry. It broke, it came up, we got the first pullback in, and then the market just absolutely flew. And then this was our target. This area of support now going to act as resistance. From time of entry, which was here, my stop went below the previous lows of that pullback, right? From entry to take profit, it was a huge move, and it took 3 hours with about a 4-to-1 reward to risk. And because it's the start of a new trend, not only did I take this trade, but yesterday I took this trade as well, down here. And some of my one-to-one students would have been able to see that. And here, for more of a shorter-term trade, these pullbacks. We're creating a scenario for ourselves where, just to repeat, number one, we look at currency strength. Currency strength identifies the opportunity, all right? When we look at currency strength, and once that's been done and we've identified what sort of market we want to get involved in, we then move to the currency of choice. We go into the higher time frame, we do our price action, and we use trade detector to find, okay, where is this market likely to move? Are we going against the overall time frame, or are we going with the overall time frame? If we're going with the overall time frame, we can hold on to the trade for a little bit longer, or for a lot longer. If we're going against what the overall time frame is saying, you can still take the trade, but you want to kind of be in and out quite quickly. Maybe have a little bit of a further stop, maybe have a little bit of a tight take profit, maybe target 1-to-1s or 1.2-to-1 reward to risks, okay? Just to kind of hedge your risk and be a good risk manager, all right? We then can implement stuff like these trade detector signals, Fibonacci, which is a more advanced trading tool, okay? Inner trend line breaks to identify the timing and when this market is likely to start moving up or start moving down, depending on the pair that you're looking at, okay? So before I take a breath, I'm going to ask, does that make sense to people, right? If it doesn't, I'm not doing my job right. I can always repeat it, and I can take you through a little bit more of a beginner's way of explaining it, and maybe re-explain, or give you some more examples, give you some more analogies. Just put a yes or a no in the chat if it's all making sense. Okay. Okay, good. You're inflating my ego. Yes. Okay, John. Okay, absolutely fine, man. It's a no. That's fine. What we'll do, I will go over and I'll map out exactly kind of what it looks like. John, I'm just curious, why a no? What's confusing you? Okay, fine. Well, think of it. This is the process, right? I'm showing you the process now. So no matter what, when you're new, it's always going to be a little bit confusing. right? There's probably some people that haven't said that it's a no for them as well. There'll be people in this chat that will find it confusing, right? Because you're new. But the more you use something, the more you surround yourself with it, the more lessons you take and the education you take up, the more it will make sense. We all have to start from somewhere, all right? So, number one, I'm just going to type these out before we go into a live setup on gold that I'm looking at, okay? So, number one, so if we're going to focus on process and what each tool does, okay? Number one is currency strength, okay? And we can stop being so big and bold with this now, right? Number one is currency strength. What does it do? Guys, for those that have been following along, what does currency strength do? Or John, what do you think currency strength does as well? What does it do? This is where we find out who's been paying attention or who's been sleeping. Sometimes my voice can put people to sleep, so don't worry. Amazing. So it identifies, or it's an indicator that displays whether a currency is expensive or whether it's cheap. It identifies oversold and overbought currencies. It measures strength and it measures weakness, okay? So what we do is we use currency strength to identify strength and weakness in currencies. Right? When we use it to identify strength and weakness in currencies, we then want to match the opposite currencies together, i.e. match expensive with cheap, okay? Or match strong with weak, okay? So currency strength is our opportunity identifier. All right? Simple? And John, you even got that one right as well, which is great. Exactly, Nabil. Nothing goes up forever. And especially in Forex, the markets love to revert back to an average. They love to go up and down. Markets move in waves, which is what I'll go through with you in a moment. Okay. Number two is trade detector. Okay. Trade detector, in a nutshell, is an automated tool that helps me and helps our traders do technical analysis. It's a technical analysis tool, okay? So it can help you with your price action analysis. It can simplify the tools you use. It's quick. And its job is to help you identify turning points. Okay. So we've got CSI as the opportunity identifier. We have trade detector as the tool that helps us identify the turning points in the market, i.e. tops and bottoms. Okay. Trade detector, we'll put this kind of as a 2B, right? 2A and 2B. Trade detector can also be used for your entry. So we're looking for 3 signals on trade detector to enter a trade. Okay. And for those that aren't familiar with it, trade detector comes as like a full package. You can momentum trade with it, you can trend trade with it, you can reversal trade with it, right? My favorite is TD1, TD3, and TD5, which is exactly what you see on the screen here. Okay. TD1 are these big green and red squares. TD3 is where it fires off a blue or a pink signal, blue for buy, pink for sell. And trade detector 5 is we want it to kind of enter into these pink zones. So this is a buy opportunity, this is a sell. When they all fire off at once in an area of interest, they're really, really good entries, okay? Now, number 3. I'll put it all under one kind of umbrella, are the LTI automated tools. So this is automatic support or automatic S and R, trend lines, fibs, and something called our daily trading range, more so for day trading, right? Okay. They're designed, the automated tools, you can do them manually, you can, right? But the automated ones just kind of speed up the process a little bit, all right? My favorites are what you can see, automatic trend lines, automatic support and resistance, and the Fibonacci. So what does focusing on Fibonacci, right? Because I haven't really gone into detail around that. Fibonacci is something that a lot of trading mentors don't use, or they don't go into it in detail. They don't tell you what it actually does. Specifically Fibonacci retracements, right? What they do is they help you identify market waves or cycles, right? Now, what do I mean by that? When I say it identifies market waves and cycles, as I believe Nabil said, markets never move in a straight line like that. They just don't. They very, very rarely do. They always move in waves. They always move up and down, up and down, up and down, up and down, up and down. That's how markets move, right? What Fibonacci does is it helps us identify what wave are we in. Are we in a big extension with a trend, or are we in a pullback? And we do this through what we call A, B, C, D movements, okay? So A is the start of the move, B is the start of a retracement, C is the retracement, and D is the target, okay? And then once the D gets completed, that becomes our new A point, that becomes our new B point, that becomes our new C, and that becomes our D, okay? All right. Markets move in A, B, C, D moves. They go from A to B, B to C, and C to D. So let me show you an example, right? I'll reload gold up, but I'm going to just focus on EuroCAD because this is a trade that I took. So this is what our fibs look like, right? And these get auto plotted for you. You can actually see At the start of this trend, so we'll go on to the 1 hour because it's going to be easier. We go from A to B to C to D. Simple. And then you can then see that the A and the B get put in brackets, because as soon as that gets completed, it goes A, B, we get a C pullback, and then our D target has just been hit on EuroCAD. So we're now expecting for this market to come down and potentially come up again. Potentially, right? We haven't done the analysis on it. But I actually took a trade this morning on EuroCAD to short it, because I saw that we had a target here, and I identified my market waves, and I knew that I had a high probability idea that this market is likely to come down to this area at the very least, okay? That's what fibs do. They help you identify market waves, right? So to give you guys a full picture as to what we're doing, because loads of people think, oh, you know what, I use all these tools, they don't actually know what they're doing with them. They're just using them because somebody else is. They don't know why, they don't know what they're doing. This is a full system that I'm using every single day, and it has logic behind it. The logic behind it is each tool has its job, and it has something it needs to achieve for me. If it doesn't align, I'm not going to take the trade. So currency strength, it's our opportunity identifier. It helps me save time, rather than, you know, me spending hours and hours and hours trading currencies that aren't actually going to give me a good ROI. I spend good quality focused time on just a few currency pairs that are more likely to give me that ROI. And we can use it as a confluence to match a strong currency with a weak currency. We're expecting a big move to happen. Trade detector, again, I use it as a time saver, and I help it with my technical analysis. You know, for those beginners that aren't confident with their technical analysis, with their price action, you can use trade detector, and it can do that all automated. Again, you don't need it. You can do your own personal price action, right? But what I find with TD is it helps me identify the turning points. Yes, it helps provide, you know, the technical analysis side. I can do all of that manually myself. I use trade detector just to help speed that process up. But where I find the most value is by identifying those turning points in the market, where we get a trade detector 1, trade detector 3, and trade detector 5 signal. So we're now building up layers to the strategy. Not only are we getting a good signal on CSI, and it's a good opportunity, trade detector is also lining up, and it's saying, hey, look, we're actually at a turning point, right? And then we go into number 3, which is where we identify our fibs, our market waves. Are we going to be likely to pull back? Are we likely to be in this extension? Where are we in the market? What's the context? And then you can use your trend lines for your inner trend line breaks. Like we saw on this example here on EuroCAD, right? As a live example, a trade that I took, CSI telling us to buy the pair, trade detector giving us a buy signal on the 1 hour. Not only did we get a buy signal on the 1 hour, our Fibonacci had hit a D point. Market's moving A, B, C, D movements. So we're expecting this market to start to pull back, okay? That's an additional confluence. On top of that, we get an inner trend line break. The market pulls back. We enter a trade. Simple. These are not Elliott waves. These are more advanced than Elliott waves. Elliott waves work, but the way that we prefer to teach is through Fibonacci. It's actually much easier. It's a lot more systematic, okay? All right. And it's really as simple as that. So I'm going to take you through some live analysis on gold, right? We've got 10 more minutes and I can try and smash through it. Gold is a bit different because currency strength does not cover gold, but it does cover the value of the US dollar, okay? In this example, on the 4 hour, the US dollar is kind of in a little bit of no man's land on the 4 hour. Maybe potentially for a sell overall, which is good. It was kind of near that area. And again, on the 15-minute, again, kind of approaching this middle area, potentially for a sell-off on US dollar. In that circumstance, because gold is XAU USD, that's a nice confluence. We're expecting some short-term weakness to come into the dollar. Therefore, we can buy up gold. Gold is essentially a safe haven. When there's weakness in the dollar, you usually see a lot of investment in gold. When there's a lot of economic uncertainty, you see a lot of investment in gold. And that's what we've recently seen, right? So let me put a blank template on, or I'll put on my trade detector template and we'll load up gold. And I'll show you guys my live process. So if I go quiet for a couple of minutes, it's because I'm focusing, okay? So let's go to our weekly time frame. Okay, you can see gold has been going up aggressively. We're going to look at our weekly support and resistance. And you can see that we're actually bouncing off of this weekly trade detector middle line, okay? And you can see that it's acted as both support and resistance before. So this is a nice confluence. If I'm going to look at a trade on gold, it's probably going to be up. I'm going to be buying it, okay? So we go into our daily time frame. And look at this. Trade detector again is actually giving us a buy signal on trade detector 3, and we're at a support level on trade detector as well. I just want to take a look at some support and resistance. Again, you can draw some stuff in manually. We are currently kind of retesting these previous highs, which haven't been tested before as well. So all really good confluences to look at buying gold. Number 4, or the 4 hour, should I say? We have nearly everything being fired off on trade detector here. We have a 4 hour trade detector signal on trade detector 3 and trade detector 5, and a medium signal on trade detector 1. We can put our down fibs on. Fabulous. A, B, C, and we've hit our D target. We've bounced off of this support. This gives us an indication we're more likely to move up now than we are down, because we've identified our market cycles. Like I mentioned to you, markets move in A, B, C, D movements. Okay, if they move in A, B, C, D movements, well, we've got A, B, C, D. A, B, the next letter is C, and we know that B to C movement is a pullback. Okay, so gold is actually giving us a really, really good buy signal at the moment. Let's take a look at the 1 hour. Okay, we have a trade setup on gold as we speak. We've had all 3 signals fire off on trade detector here. We had trade detector 1 with a big green square for a buy, trade detector 3 for a blue signal and a blue arrow here, and we dipped into the pink oversold area for a buy. We got all 3 signals on trade detector. This morning, if you're awake, you could have taken a buy on gold and you would be heavily in profit at the moment, right? That's a higher risk way of trading though. Remember, I always like to look for confirmation. I like to look for the move to happen first. We've seen that move. Have we seen a trend line break? Let's take a look. Okay. And this is something that we've back tested at the London Trading Institute, by the way. If we see an inner trend line break in an area of interest, there's about an 80% chance it will go and hit the next inner trend line, okay? So what have we had? Lovely, a nice inner trend line break. Can you see how we've now got all of the energies aligning into just this one process that's saying like, look, this is a high probability trade. It's now just time to find, where can I enter? What is a good price to enter on? All right. We can use our Fibonacci to help us identify that. So remember, markets move in A, B, C, D movements. We've got an A, we've got a B. This will be a manual drawing. So we've got A, B. I'm expecting this market to come back down, and it'll be really nice for us to come down and retest this area. If we come down and retest this trend line, that right there is a fantastic area to look to buy gold. And I would look to buy gold up to this area here. That is a trade that I have high conviction on. We might lose it. I'm actually going to put an order in on gold straight after, right? For the New York Open, I'm expecting gold to dip slightly and then for us to distribute up. Looking for entries around, so the best entry for me personally would be around here. So around 31.52.54. So 31.52.54 is a really nice entry. Okay. You can go a little bit higher if you wanted to. So you can look at 3157.75. You know, if you want to be safe, you can put your stops behind previous lows. Okay. If depending on what strategy you use, you can go for a tighter stop if you wait for some sort of confirmation on a lower time frame in that area, right? But just to be safe, you can put your stop behind previous lows, and then your target can be this area here, so 3216.65. Now, there's a few things that can happen here that you need to prepare yourself for. This market can come down, we can get filled, the trade can plan out, it can hit our target. Okay, that's number one. Number two, this trade can just keep going and there's no trade there. Okay. Number three is this market can keep going, you can enter it, and it could stop us out. Loads of people don't prepare for the stop out. You have to be comfortable with the trade. Not every trade idea works out. We can't control the markets. The markets do what they like. But what we can do is we can filter out the opportunities by using a consistent, disciplined approach, and we can find trade ideas that have a high probability of success. This trade idea here has a very high probability of working out, in my opinion. All right. So that gives you guys a live breakdown on gold. Okay. I know some people are saying about like a zigzag indicator doesn't work the same as Fibonacci, but it's the same sort of process. For anybody that's kind of interested in CSI, Trade Detector, London Trading Institute tools, they are available. All I say is like, look, you can just drop me a direct message. I'll actually link my WhatsApp in the chat for you guys. Just bear with me 2 seconds. I'll see if I can find it. Here we are. I'll do that now. So here's my WhatsApp. If you want access to any of the tools, they are available. Some of them subscriptions, some you can purchase, whatever, right? But if you're interested in getting set up with any of them, just drop them a message. If not, don't worry. Some of the stuff that you can do manually anyway, like drawing in your support resistance, drawing in your trend lines. You know, if you're already familiar with Fibonacci, you can draw those in as well. All right. Okay. But if you have any questions or if you need any support, you know, even if you want to drop me a nice message on how much you enjoyed today's webinar and how you didn't fall asleep, then feel free, and I'm more than happy to help where I can. All right. I think it's also worth noting that if you like this sort of style and you feel like this is kind of what you need to take your trading to the next level, we've actually introduced a newer program called the Fast Track program for anybody that's looking for any additional support from a one-to-one basis. It's basically designed to help you become a funded trader within about 3 months. It's a newer program. We actually have quite a lot of our one-to-one students in the chat at the moment. If you guys feel free to share your feedback here on, you know, the daily live events that I do, live trading rooms, how valuable they can be. That will be really appreciated. But yeah, anybody who's interested in either taking advantage of said tools or you know, is looking for any additional support, feel free to message me. But more importantly, if you have any questions or if you want to be pointed in the right direction, just let me know. And again, drop me a message and I can kind of take you through the details there as well. All right. Amazing. Thank you so much, guys. There's some really nice words there. Thank you. You can see how many people are on the. Even Andy's popped up. You're the best. Hey, look. Is there a polite way to say I know? I'm joking. I'm joking. But like, look, guys, I'm here to help. So even if you just have a question or if you're struggling with something, I know someone was mentioning about, you know, prop firms to go with. Drop me a message. I'm happy to point you in the right direction. For anybody that is, you know, takes up any further education, I hold daily live rooms, live trading rooms where people can see me trade live. Very similar to what you've seen today, really, on gold. So yeah, feel free to drop me a message. Always happy to support where I can. I really hope that you have enjoyed today, guys. I don't think there's very many people that kind of take you through their their full trade plan in about an hour. I have to say, I'm probably going to have to grab a coffee and get some water. Otherwise, my throat will dry up. Thank you, Simone. Thank you, Paul. Thank you, Sol. Anybody that has any questions, drop me a message on this number. I'll put it in the chat again so you guys can do it. Literally, just drop me a message on that number, and I'm always happy to help. Like I said, if it's for subscriptions or if it's for packages, if it's just for some general recommendations, drop me a message and I'm always happy to help. All right. Thank you so much, guys. We'll put a pause to the session there. Any future events, we'll let you guys know. A recording for the session will be sent out to you guys as well. So as soon as that's available, we'll get an email all sent out to you guys. But appreciate you guys joining. Thank you so much for your time. Hopefully you found value in it. Have a fantastic rest of your week, and hopefully we'll catch up either on WhatsApp or on the next event. Thank you so much, guys. Take care, and we will speak soon. Cheers.